So when it comes to day trading and swing trading, the most important thing that you can have is a trading plan, and that includes defined risk tolerance. So what I like to do is number one, invest with no more than 5% of my portfolio per trade. It's generally a lot less than that, in the 1 or 2% area. And what this does, if you're doing like a 5% trade and you have a 20% stop loss, this means that you're risking no more than 1% of your entire portfolio. So if you have a $100 portfolio, you're risking no more than $1 to make, whatever it is that you plan to make. Um, Now, if you're doing less than that, if you're doing like a 2.5% portfolio size, then you could do a 50% or a 40% stop loss. And, it goes down that way. I'm not saying that's what you should do, but theoretically you could if you're still willing to risk that 1% of your portfolio. Um, so it's very important to know exactly how much of your portfolio, whatever amount you're trading with, is. And when you have a stop loss, make sure to respect it. There's no like, well, maybe I'll hold it for a little bit and maybe it'll come back up, because it very well could, but it probably won't. And if you're down 50%, then you need a 100% move to get back to break even. So it's just not a very intelligent thing to do, but it is a very easy thing to do. And it's something that a lot of new traders kind of get stuck in the habit of. So come up with a stop loss and respect it. So for this here, well, let me turn off my indicators. So for Tesla, say you were to enter, at this level right here. So let me bring up a profit target. So that would be your entry. And then I would have my stop beneath this key level here. Let me just bring this out a little bit further so you can see it. So I would have my stops kind of right beneath this here, this level. And my profit target is, well, let's draw some fibs. This is a trade that I'm currently in. So that's going to be my profit target, is 595 area. It's actually 596 is what I'm looking for. And so this means that I have a a 2%. You know what? This is actually, let me adjust this a little bit. Okay. So this means that I have roughly a 2% profit with a 1.3% loss. And so this one is not exactly the best in terms of, oh, you know what? Actually, this is, my entry is down here. So my entry was there and my stops are in the same level. So what this is doing is giving me, okay, this is better, a 1% loss with a 2.2% win. And so what this does is, if I keep the same trading plan for everything, that means I can lose and win 50% of the time and still be a profitable trader. Now, I'm fortunate enough to say that my win accuracy is much higher than that, as everybody in Playbit, can back test me on. Um, but essentially, if I make 2% on a trade and then on the next trade I lose 1%, I'm still profitable by 1%. Now, this is on options, so it's going to be a little bit leveraged. It's going to be a little bit more than 2%. A 2% move on Tesla is actually going to make me roughly a couple $100. Um, it would probably be around a 40 or 50% profit versus a 10 or 20% loss. So what this does is it just allows you to be profitable long term, even if you're not consistent with trading. And this goes for everything that you're entering. Come up with a realistic profit target. I mean, yes, I would love to have this run up to 900 again. Come up with a realistic profit target. So this is essentially where I will scale out of most of my contracts. So if I have 10 contracts, then I'll probably sell half at this point, or at least a third at this point. And then from there, I start going to other key levels. 600 is going to be a very key level. So right here, yes, that's only $4 away, but there could be strong resistance here. So I scaled out into strength here. Now I'm going to start selling maybe one or two here, and then I can hold the rest and kind of let those ride and see where they hit. Now this is the ultimate target right here, 627. So I currently have June 18th, $615 calls, and I am expecting to land kind of in this region. So if I were to hit my absolute profit target, let's go with 620, which is my actual target. That gives me a 6.5% win, and at the very least, or at the worst case scenario, a 1% loss. So come up with a defined trading plan. Now we can move over to something like Bitcoin and have something very similar. So if I were to enter Bitcoin, it would be about right here, actually. Now we can pull some fibs and kind of see what my profit target would be. So I want to go for this 38.2. Let me extend this out further so you can see it. So that 38.2. And again, this is my entry point here. That gives me a 4% profit. And then if it falls beneath, here, let's expand this. If it were to fall beneath, so you want to be doing all this based on key support and resistances. And I would make my stop level basically right here, the top of these wicks here. Because if it falls beneath this level here, yes, that is sketchy. So you could make this your stop level. I'm going to give myself a little bit of bounce room, and that's going to be the top of these wicks. So that is a 2%, a 2% loss and a 4% win. So it's actually a little bit more than that. So it should always be a 2-to-1 ratio. So, if you're going to profit 4%, you want to lose 2%. Well, have your stop set at 2%. And so this is a great visual here just because it'll give you the actual number that you can set like a limit sell at, or you can have your stop set at this exact number. And you don't have to figure it out. This just kind of tells you. And it's just great to have a visual setup. So if you don't have this tool, then, set up just a horizontal ray where you want to take profits. So once it hits this line, okay, that's where I'm going to scale out. It's extremely beneficial to have a trading plan, and make sure that you are within your risk tolerance. You're doing those 1 to 5% plays with at least a 20%, at the most a 20% stop loss. I tend to go with a 8 to 10% stop loss. I don't like losing more than that. I would rather re-enter at a lower price, like let it drop a little bit and then re-enter if I need to. But definitely come up with a trading plan, and you have to stick with that. So when it comes to trading, when you enter, you should already know before you enter, this is where my stop is going to be. It's at this key level here. This is where my take profit is going to be. It's at this key level right up here. And nothing should change that, because these key levels have not changed from the time that you entered to the time that you exit. These will always be important levels on whatever time frame you're looking at. So on the 30-minute time frame, this is going to be an important level for the next few days. So make sure that you just trust your technical analysis and you don't stray from it, because that's where people kind of get lost and start to lose. So extremely important to have that down. Now, another good suggestion is writing that down and having it, put a Post-it note on your computer, have it written on a piece of paper behind your computer, on your wall somewhere, put it in a journal, whatever it is. If you have a trading journal, like, always have a defined risk plan. That is going to be the number one thing that you should do before you start trading. And that's something that I think people shrug off. And then after taking a few losses, they come back and realize, oh, you know what? Maybe I should have been documenting this. Maybe I should have a risk tolerance, or a trading plan. And that's something that I try to help people with. And it does help almost every single time. So try that out the next few trades that you have and just kind of see how it goes.